I hope you're doing fine out there, and want to say thanks for checking on another video from NetPicks. Hope you hit subscribe. And in this video here, we're going to talk about probably one of the more popular forms of technical analysis, and that's trend lines. And trend lines, let's be honest, they've been such a popular way for traders to define support and resistance levels in pretty much any market. But the key to be able to use them efficiently and effectively is you have to ensure that you have a rules-based method to draw them and be consistent at it. So what are trend lines? They're just simply representing support or resistance depending on the direction of the trend. Think about horizontal support and resistance, but on an angle. Okay. Markets go up, markets go down, markets will go sideways. So when a market's trending, when we look at the impulse moves, which is moves in the direction of the trend, and corrective swings against the trend, that can actually tell you the strength or the weakness of that trend. So when a market's in a strong uptrend, we want to see impulse moves larger than the corrective declines against the trend. Okay, this shows that the demand is still pretty high for that particular instrument. So when all those people that have bought are done buying, you'll start to see impulse moves get shorter. The size of the corrections against the trend may start to increase, and there's going to come a time when the buyers are done and the market's going to go down. So when this occurs, we're going to start to see corrections larger than the impulse moves. And this is just a graphic, shows a typical uptrend, large thrusting impulse moves, smaller corrections. But I want you to notice when we see larger corrections that either sellers are stepping in or buyers are unloading their positions. Now, either way, it's possible that we're going to see some smaller impulse moves up. So in this example graphic, we see a lower high put in, a new lower low is put in. Now when you're in tune with the swings, in this example, it can give you a heads up to either lighten your position, take a quick scalping trade, or just stop entering any long positions. And once you start seeing momentum break to the downside, well, that's probably a time to exit your position. This image here shows a trend line trading technique, just connecting the lows, and that can help determine when a change of state in the market has occurred. Okay, now this does not mean we're seeing a trend change, but it's a visual clue that at this point in time, what was a steady uptrend has met some strong selling. So after we see the trend line break, we could see a retest of the highs of the market. We can see a test of the trend line. We can see a consolidation start to happen. We can even see just a complex correction take place, which is a two-legged pullback. Now you can also clone the bottom trend line and you place it on the highs. That's called a trend line channel. We can use a top line to measure momentum. How do we do that? Well, once that upper line is broken, traders will either look to short the market or play reversals after the breakout pullback type of price move. About fanning trend lines. Well, as we talked about earlier, we can see large price moves, and that can result in the current trend line being too far from current price. Now, these can be pretty tricky, as some traders may look at it as intense interest in the market and look to position in the direction of the break. But other traders will look at the same move as being out of the ordinary advance of the trend. And they're just going to stand aside thinking that we have a climax or an exhaustion move in that instrument. So consistency, that matters when you're drawing trend lines. So one rule to consider in the case of a downtrend here is to make sure that you can connect the last swing high into the lows, as you see here. What this does is it ensures that the relevant swings are being used and can also give you a steeper trend line that is more in tune with the market rhythm. You can also see here that you'll get an earlier trend line break while keeping in tune with the price action. Now, there's no hard and fast rules when it comes to drawing a trend line, but you have to have your own consistent method of doing that and how you're going to choose the lows or the highs that you're going to use in construction. Well, the first key that we can all agree on that you have to have 2 points. So here are 2 easy to find points. Now, I also included a lower channel connecting the swing lows. And you can see that the upper trend line, we just extend it to the right. So when you're looking at this, is there a price pattern you can see at that third touch that you could have initiated a trade on? If not, well, the pullback to the upper line is actually just a short-term uptrend. But we can draw a trend line on that. So traders can play a break of the uptrend line, place their stops over the high of price. And then, in a perfect world, we see the current trend continue to the downside, then you're in profit. It's actually a pretty versatile trading tool if you use it correctly. And for simplicity's sake, I just omitted any other lines to avoid clutter on this chart. Using higher time frames. See, on lower time frames, we can get a lot of highs and we can get a lot of lows. Obviously, when you go higher, you're going to have less of them. So this is a daily chart, and you can see that the break of a higher time frame, that can actually lead to bigger moves in the opposite trend direction. Why? Think time. The more time that it's in place, the more time other traders are able to see the same zones as you do. So obviously, the more traders that are involved, the bigger traders that are involved, the better the reaction is going to be. Now, once we start to get above daily charts, we can actually use trend lines for targets. This is actually a daily chart, but that trend line at the top, that's a weekly trend line. So you can see that we fanned the trend lines as the uptrend continued and got steeper. As price was reaching the zone of the weekly trend line, you can see resistance set in. Price is not advancing as it was before. And eventually we see price reject right up to the trend line and then pull back a little bit. And then eventually what happens? Price gapped over the trend line. Another rule to consider is try not to cut through candles, even though there is another way to draw trend lines. Now, there are some that are going to say that cutting through candles is okay. But if you think about it, that's going to disregard the tips of swing highs and lows. Does it matter? Sure. If you got stopped out just to the tick, then those tips, right, the extremes, they actually did matter, didn't they? So they should matter with your drawings. So this example here, this actually shows an irrelevant trend line. If a trader played the break to the upside, they're quickly taken out of this trade. So this ties into another tip. To ensure that the last swing into the lows or into the highs is connected. Now I want you to notice the difference between this one and the other one. Now, using the trend line entry, breaking the trend line, you get underwater. There are areas where price will give you areas that you can manage your trade. You can also note that the pullback after that break actually stops in the zone of the trend line, which would give you an opportunity for a trade entry using what? Probably another trend line. This is a really good rules-based approach that comes from Trader Vic. So this example here, this is just a 60-minute time frame chart. Okay. Number one, price puts in a high and begins to pull back. So price breaks the trend line to the downside at number two. At number three, we see price test the backside of the trend line as it tries to retest highs, and it eventually fails. So once price breaks the low at number two and it holds, consider a downtrend's in place. Now, keep in mind, this is all going to look a little bit different depending on the time frame you use. So on a higher time frame, you may not get a retest that's as obvious as this one. We may also get a further breakdown in the pullback. So it's vital that you know what time frames you're trading. On a 1 hour chart, this may be leading to a two-legged pullback and will eventually resume the uptrend. On a daily chart and above, this could just be a complete change of trend. So it matters. They're not difficult. And just a few lines can actually give you a trading strategy. There's so many different ways you can use them as a trading strategy. But it all starts with one thing, and that's consistency in how you draw them. And learning to draw them, that's a skill you can easily master at your rules. Right? But it's one thing to master a technique, but it's a different world altogether to execute them when the market's moving. Now, trend lines, they're not foolproof, but they can actually give you zones where you can look for reversals or continuation of price to get yourself into a trade. I think you should practice either of these ways of consistently applying a trend line. Spend that chart time to see how price is reacting when it finds itself meeting one of them. Hope you enjoyed the video. Any questions or comments? Pop them in the boxes below. We'll talk to you soon.